I do have the traders in front of me as well, as you saw. Jim Lebenthal, Josh Brown, Steve Weiss, John Najarian. Take what's happening on the left of the screen for itself. The market today. Mm-hmm. What do you make of how the market has reacted to these bank earnings?
I think the guy to my right nailed it yesterday, Steve Weiss, because he thought that we'd see earnings that were good but not great, and not much of a reaction, and more or less some people perhaps using it, like Steve might, to take some profits or get out and switch over for a little bit. I still like these banks. I had a trade on yesterday, Judge, in Wells Fargo. It's down 1.6% today. You know, it's more or less a nothing burger, these particular earnings, although the JP Morgan CFO did say that he didn't think the flattening yield curve signaled a recession, and then he made the case for why that would be.
Doesn't give you much joy to own the banks, does it?
No.
These were a disappointment. I mean, JP Morgan maybe notwithstanding, okay, and that stock is reversed and that stock is higher. Mm-hmm. But what you got from some of the others, Steve, I don't see people running towards the banks in droves today, and I think it's fair to say maybe that's a disappointing result.
Unquestionably disappointing result. This was supposed to be the quarter where they blew away earnings. You had everything going for them. You had volatility in the market in the early part of the quarter, and then it dried up. You had banking revenues that were going to go through the roof, and guess what they did because of the increased M&A. Even though those fees are seeing pressure, which is important. So, look, I don't know how it gets any better than this. Of course, you can get a steepening yield curve, but then again, you're not betting on the fundamentals of the banks. You're betting on the yield curve, which, by the way, they can't control. So my view is that I was waiting for this quarter to start exiting some of the position. I had sold some Citi earlier in the year, but now I got to wait a little longer. So I'm not selling them. I'm for sure not buying them because I don't know if they're tradable at this point. So disappointing, and I think it's one more. I liken the situation to have all these value players lining up like the old Civil War movies, and they keep shooting them down as they lie up. This is another quarter where another row is getting shot down.
I just want to remind you what's taking place on the other side of the screen if you're just joining us as well. That's the Deputy Attorney General Rod Rosenstein announcing 12 indictments in the Mueller investigation of Russian intelligence officials charged with hacking Democrats in the 2016 election. So that's the Deputy Attorney General there on the left-hand side of your screen. Making those remarks right now. Jim Lebenthal, you want to say something?
Well, I'm going to disagree with my friend Steve here. I don't think that this was a quarter that any of us in the bank stocks were looking at as a blowout. And the reason is simply the flattening of the yield curve. When the yield curve steepens, and I do believe it will steepen when the China issues are at least partially resolved, you will see the banks respond. In the meantime, there is a silver lining here. We've talked a lot on the desk about buybacks. Sometimes buybacks don't matter, particularly when companies are issuing a lot of stock or options that basically cover those buybacks. But take a look at Citigroup, okay? The shares outstanding went down by 8% year over year, and they're buying these shares back at below book value. So for me, listen, I'm not happy that the stock is down today. I thought the results were perfectly fine against my lowered expectations. But what I love is they're going to keep buying back shares below book value. That's great for me. Leave me as the last shareholder standing.
Jim, let me ask you a question. Didn't you think that, I'm not talking about blowout, expectations to come down to actually set the stage for better than expected earnings? But didn't you think this would be a catalyst this quarter?
I did not.
To drive the price higher?
I did not. I mean, two things I want to say about that.
That's not the impression I got from you and all the others.
No,
Mike Mayo definitely thought it would be.
Well, I saw the show, I think it was yesterday with Mike, and he laid out the bull case, which included buybacks, by the way. But when you're looking at these stocks, JP Morgan, Citigroup, Wells Fargo, okay, these are not stocks that you're really looking at for idiosyncratic company outperformance. It may occur, but these are bank stocks, big money center bank stocks that are going to respond to the macroeconomics.
So why don't you just own an XLF if you're not looking for the
you might, but but look, let's take a look at a discrepancy that I see. Okay, Wells Fargo trading at a significant premium to book value. I don't think the reputational risk is properly priced in there. You've got Citigroup trading at a material discount to book value. That's why I don't want to own the XLF. That's a choice I'm willing to make of taking Citi below book value.
But I would tell you that is idiosyncratic,
It is. I'm
Because
saying
Citi
that.
trade.
Yeah, no, I'm saying that's idiosyncratic risk.
But I thought you said you didn't want to own these because of idiosyncratic
No,
differences.
look, the yield curve is going to steepen unless we get a recession. John pointed out that Jamie Dimon today says he doesn't believe a recession is imminent. I don't either. I think you get the China issues resolved at least partially. You get them resolved at least partially. The 10-year goes up 40 basis points. Bank stocks react.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.